Welcome to part 2, the Google options trade. Google reports earnings on July 15th once again, and what we're basically looking at is a weekly chart that SMF has designed its own system. As the public looks at standard chart applications and things like that, or stock patterns and chart patterns, that's their way of doing things. We have our own system that we use that's very, very accurate. And it's used for our SMF MMTs. And what they're being taught today is that the upper end of resistances and a good earnings report can take us to this level right here of 524.78. And remember, today's date is 7/11/210, and the time is 10:43 a.m. Pacific Standard Time. What I want people to be aware of and understand completely is how we're going to play the earnings season on Google's earnings. And in part 1, we talked about a little bit about that relationship with China. We were long all of these contracts and trading off of this last bottom. One of the things that I will show outside of the closing price of 467.49 is that the weekly chart is as follows. We got to a very oversold condition at 13.58 last week, and we went long there immediately. That was a great opportunity to start buying down there at that bottom right around that 435 area. The previous swing low of the week was exactly 433.63 right here. And we were moving in right around that 435 handle. It was one of the few times we weren't right to the penny, but it's okay, we'll take it. And basically we were looking for some kind of resolution out of the internet application that Google's involved with right now with the Chinese government. So basically any more good news about Google getting back in that arena and, you know, dealing around the censorship plans and all of the various different types of procedures and policies that different countries have and implement, they all have to come to an agreement. If there is a resolution to that, what drove the stock down from the highs over here in January, and what made all of this turmoil to start with from this very long uptrend was that news. And Baidu, which is a Chinese internet search engine company, skyrocketed off of that news or whatever kind of manipulation that was. All I can say is that we're above the 100-week moving average. The weekly moving averages look very sick because they're all descending in value. So an earnings gap up here into that 50-week moving average, which is at, believe it or not, let's take a look and see where the 50-week moving average is. It's at $527.39 now. So that would be either we would have to have a good enough earnings report to gap up above that, hold that as support, and then continue to run higher. Now, relative to where the economic status is and the earnings channel is with R&D and development that Google has done, there has to be where they've managed to keep making more money to pay for all that future development that it's involved in. That's one of the positive things on the fundamental side with Google. And it's very big. It's got lots of various different new apps within the internet structure and the internet market. And basically up here at that 50-week moving average, that 20-week crossed over. That's that red line right there. So that used to be a major breakout point last year, and it was a really nice weekly bottom through here before it caved in on 5/2/2010 and broke right through there. And that green line is that 200-week moving average. So that's your first area of resistance. True enough, during the intraday trading range, you would have to blow right through. You'd have to close above that 200-week. One of the things positive about the 200-week part of that reading is as follows. Notice that the 200-week, which is the green line, is not descending in value. Therefore,